Why do cryptocurrency prices move so fast and there are such huge swings in such short amount of time? Really, the volatility is the same as any other commodity. The prices are driven by the laws of supply and demand. If people want to buy, prices increase. If people want to sell, prices decrease. Pretty simple, but there are a few different differences between cryptocurrencies and traditional markets. A big part in the price fluctuation is based on speculation. This speculation can be about a few different things when it comes to Bitcoin and cryptocurrencies. The underlying technology is really the first factor, the amount of progress being made, and how bright of a future it looks from a scaling and security perspective. For instance, a lot of Bitcoin price fluctuation has been based on how well it can scale with the Lightning Network, SegWit. Those have been major players in the past volatility and run-up of late 2017. Second, when dealing with the new asset class, not every government and institution fully embraces this technology. I can't even list the amount of times governments have gone back and forth, specifically China, Korea, Japan, back and forth if cryptocurrencies are legal, Bitcoin legal. Different institutions have said different things. Different people have said different things. It's just whiplash back and forth when it comes to regulation. Future regulation can affect the way people are able to interact with these networks. They can't stop the networks, but they can stop people from using the networks in some cases. Those two factors play the biggest part when investors and traders try to speculate the future of the marketplace. But what exactly makes the market have such huge price swings in such a short amount of time? The two I listed before, security and regulation, that's the same in any other market, traditional market. But they don't have the same huge price swings as cryptocurrencies have. It's because the amount of volatility in the crypto space is due to the low amount of trading volume. It's a crazy low number of trading volume, which is why we're so interested in cryptocurrencies, because we're still so early. But being an early adopter, an early player in these markets, it's a trade-off between the volatility and the potential gains because you're still so early. When there's a lack of people trading, comparatively to traditional markets, larger players can move a market around more effectively. A larger order can move it a hell of a lot easier than one of these traditional markets. The total cryptocurrency market cap at this time of recording is about 350 billion. USD. To put that in perspective, the tech company Apple probably has about that much cash on hand. So the lack of inertia allows for such a large amount of swings. The other side of this, though, can be due to the type of people trading in the cryptocurrency market. So for traditional markets, Wall Street has controlled these markets from the very beginning. And they control traditional markets and plays an overwhelming role in the structure and movement within those charts. Every movement in those charts is orchestrated by financial institutions. But cryptocurrencies are a little bit different right now. It's the average investor taking part in crafting the space. They're crafting the charts, they're crafting these markets themselves. Wall Street is late to the game for the first time in history, really. This is the first asset class where the little guys are the first ones in. Not being as seasoned as old Wall Street, people tend to move in a more emotional pattern. With these emotions, movements can become more exaggerated and volatile. That's pretty easy to see. People just aren't used to trading like someone on Wall Street would. It drops a little bit, they're out. If it starts going up a little bit, they rush in. Fear of missing out. We do feel the volatility will decrease sharply as time goes by, really sharp. As these institutions start gaining a foothold in the space, late 2017, they see the run up and they want to get involved. There'll be more government regulation in the market, which means more institution and corporate investors will be able to enter. As the market continues to grow and the technology becomes more adopted, the volatility of the market